Last week, a lot of people talked about the death cross, right? Remember death cross? And everyone is saying how bad it is. And I told you guys, in many instances, death cross actually signals a bottom because the moving average is the 50 and the 200 weekly moving average. They take so long. They're lagging indicator. It takes so long before they actually form a cross. So in many instances, after a death cross is when Bitcoin starts going upwards. And I told you guys that last week, right? So many people were afraid of it, thinking that it was going to bring us lower. You know, like if you look at history, there's been plenty of times, in fact, more times than not, when a death cross actually indicated a reversal. The open interest jumped up hugely today. Look at the volume, 650 million plus today. There are a lot of people that are just starting to buy for whatever reason. Maybe because of FOMC meeting, maybe because of death cross, maybe they have some inside information that a spot Bitcoin ETF is for sure going to get approved in November, right? That's also coming up in November too. I don't know. There's just a lot of reasons. Who knows? Maybe the biggest reason of them all is it's just a great time to be DCA. That's it, right? Sometimes that's all it takes. You just need one to get in, you know, and then everyone just falls in line. That's usually how it is. Everyone's waiting for someone to come in first, and maybe BlackRock did that this week or today, you know, whatever reason, right? But we got a ton. And here's also the good news is DXY, which is, you know, the strength of the dollar, a metric a lot of people look at. It has not come down yet, despite the fact Bitcoin started rallying ahead of time, which is usually unusual. So take a look. The yellow line that you see is DXY. You can see we've been going up from July to now from about 100, below 100 now to 105. That's not good. Last time DXY was at 105. You could see Bitcoin was below 22,000. Actually right above 20,000, right? So the simple fact that Bitcoin is at 27,000, not at 20,000 right now is good. That means Bitcoin is definitely doing better now than before. And the fact that we're above 27,000, despite the fact that DXY has not come down again, doesn't happen very often. You know, the two kind of move in opposite directions. So this also indicates that maybe DXY is topping out and it will start coming down, or people just don't give a F. They're going to continue to buy Bitcoin no matter what. You know, one of the two, you choose. Why is Bitcoin going up? Well, maybe because of this. This is a beautiful, beautiful chart, graphic, infographic, whatever you call this. This is beautiful, right? And it really lays out the institutions that are all jumping in. And these guys are all... they're all with a T, you know. They're not even with a B. B's too small for these cats. It's T with trillions. BlackRock, 9.1 leading the way. You got Vanguard. Most argue that BlackRock and Vanguard, and I think you put State Street in there. I've heard this. Between the three, they basically own the world. But then, you know, there's still others like Fidelity that's up there too. But you take those four, BlackRock, Vanguard, Fidelity, and State Street, you put them together, you're talking about 20 trillion in assets. That's a lot of assets, okay? And every single one, except State Street, I haven't heard them, but they may be jumping in soon. BlackRock and Vanguard own some of the biggest Bitcoin mining companies already, okay? And BlackRock, we know, kicked off this Bitcoin spot ETF enthusiasm, and they're the largest asset manager there is. And every single one. Fidelity is huge too. And we know of others like JP Morgan, even though Jamie Dimon keeps bashing Bitcoin, yet they continue to push forward with their own crypto initiatives. And they push crypto upon their wealthy clients, right? And same thing with everyone else in this space. And you see in here, they're either jumping head in or they already offer services for their wealthy clients, right? Either custodian service or trading service or, I don't know, financial advisory, right? Just think about how much money there is. It just shows you how big the space is. And this is what, just like 15 of the largest? And if they just put a small fraction, just a small fraction of what they have or what their clients have into Bitcoin, which is only at 529 billion, imagine where Bitcoin and the whole space will be, right? Way, way, way higher than now. It's just mind-boggling to think about, okay? How much money there is everywhere else, and just a small fraction of that, okay? Just a small little piece of the trillions that exist out there. If it comes into the space, it's going to change things. It's going to change things in a big, big way, okay? Here, Arca CIO says BlackRock Bitcoin ETF will bring new money into the space. Of course, that's what I've been saying. You got some of the largest fund managers trying to come up with a spot Bitcoin ETF. They all will have to buy physical Bitcoin, hold physical Bitcoin in order to offer their ETFs, right? So where's this top? Everyone's predicting. If you look at the previous cycles, right, Bitcoin, basically it's a multiplier of 10. Bitcoin started like $1, went to $10. Then at $10 went up to 100. 100 went to 1,000. 1,000 went to 10,000, right? Does that mean this is the cycle where Bitcoin gets pushed from 10,000 to 100,000? I would say yes. And I think 100,000 is really just the beginning. You have a huge, huge giant, another giant from Japan. I don't know if I could say this right. Nomura. I think that's how you say it. But they are a 500 billion with a B investment bank, okay? And they're launching their Bitcoin adoption fund for institutional investors. I wonder why. Why is there so much institutional interest all of a sudden? Well, I think we know why, okay? Because next year is going to be the quadfecta. We also know that BlackRock's in the game. When BlackRock comes in, everyone starts paying attention. Larry Fink, you know, he wants to dominate. I'm not saying him dominating Bitcoin is a good thing, but the very mere thought of dominating Bitcoin has others salivating, and they want to come in too. That's why we have Vanguard and BlackRock and Fidelity and everyone else jumping in, and now you have another banking giant jumping into Bitcoin, right? Now, as retail investors, why we're in it is because, number one, we don't want to see inflation rob us of our buying power. Number two, we like to be part of the most decentralized network on the planet. And three, we want to hold the greatest store of value there is. Nothing has outperformed Bitcoin over the last 10 years. Nothing is even close, right? Institutional investors, though, however, they're coming in is they want to make money. It's pure and simple. Well, retail investors want to make money too, part of the store of value. But these institutional investors, they're late to the game. They know that they're late. Retail has been leading the way, but now they're all jumping in because they don't want to miss out on the gravy train, especially with next year, 2024 and 2025 coming up. They no longer want to sit on the sidelines and watch retail investors make money hand over fist while they still make their, whatever, 2, 3, 4%. Why do that when you can make 1,000%, right? That's what Bitcoin and crypto brings. With the dollar getting stronger and inverted yield curve, with the Fed saying there's no more soft landing. These are all horrible things that we don't want to hear about, okay? But the good news is, is that I think nothing changes for Bitcoin because next year is still the quadfecta, okay? And as scary as it seems right now, things could change really quickly next month. When we have the next FOMC meeting, well, actually it's not next month. It's in November, but it's about like a month and a half away, right? Things could still change very, very quickly. Powell has to say these things because he can't make it seem like his job is done. So he's saying a lot of scary things, right? And right now we're just kind of like, okay, we're anticipating the pain, right? But the pain might not ever come. The anticipation of pain is worse than the pain itself in most cases. So it could change very drastically just in a month and a half. Maybe next one, FOMC meeting, there's no more rate hike. Okay, we stay at our 5.5%. The U.S. economy, although weak, still is hanging in there. And then we move forward. That's it. That's it, right? And of course, this doesn't change for Bitcoin because we still have the quadfecta coming. But short term, you know, we still have to worry about this. It seems like every time we have FOMC meeting, there's like some kind of shock or spookiness or whatever. It's really still the same if you think about it. Yesterday, we did not have another rate hike. It went like how it should have, basically. Anthony Scaramucci says the worst of the bear market is behind us. I wouldn't sell your Bitcoin. You made it through winter. That's exactly right. If you lived through 2022 and first half of 2023, what are you worried about? You already lived through the period when Bitcoin fell from 69,000 all the way down to 15,000, right? Like if you've lived through that, what are you scared about, right? We're at 27,000 where we're up about 50, 60% from our bottom. We're obviously in a recovery mode right now, but why would you be worried if you lived through that? Now, if you didn't live through that, I guess, you know, that's a different story. But most of you guys have been clinging on and holding and accumulating for well over 2 years, right? So, I mean, this is exactly right.